of my investing from Kuwait in the US. And it's all about credibility, building your brand, and then basically just using social media as a platform to, as I mentioned earlier, to educate, inspire, and motivate, and just speak about my personal journey in real estate.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Keisha Kennedy is the founder of Kennedy Remedy Investments. Her company focuses on building strong partnerships with fellow passive investors in multifamily. Keisha, welcome to the show.
Thank you for having me, Sam. I'm so excited to be here with you today.
Awesome. Glad to have you on the show. 3 questions I ask every guest who comes on the show in 90 seconds or less. Where did you start? Where are you now? And how did you get there?
Sure. I started investing about 11 years ago in the residential space. And I have been still investing, and I'm investing I reside in a country called Kuwait. I am from Richmond, Virginia. And currently I help fellow investors invest in apartments through apartment syndication.
That is great. So 11 years ago, you were investing in single family. In what capacity? Were you buying them as turnkey properties? Were you buying them as, buying them and managing them yourself? What did that look like for you?
Yes, I started buying bank foreclosed properties. So those are no longer in existence, the prices that I was paying, right? And I was self-taught and I figured it out on my own. So my first property, I paid $29,500 for. It came with the lot next door, and I invested in this property in 2011. The property was built in 2010. So all I had to do was go in and pull up the flooring, lay down new flooring, and stick a for rent sign outside and figured it out.
Wow. It was a year-old property you bought for $29,000. Now, this was an REO, or was this a foreclosure at the auction block?
No, this was an REO through the bank.
Wow.
Correct. And it came with the lot next door.
That's crazy. That's crazy.
Yes,
$29,500. You replaced the flooring and put an REO or put a for rent sign out front. Yes. Where did your business go from there?
Yes. And so the next year I said, man, this is pretty simple. Let me continue to grow and to invest in other properties. And so the following year I invested in another deal that was a bank foreclosure, and then continued the cycle. And then last year I decided I wanted to scale into apartments, and I thought that I had to do it all alone. But this time I said, I'm not going to be, I'm not going to figure out on my own. I'm not going to be self-taught. I want to educate myself. And so when I started educating myself through podcasts, reading books, blogs, and joining Facebook groups, I came across that little key term called apartment syndication and realized that, hey, I can have a partner and scale much faster. And so that has been the key to success, to scale so fast within the last year.
What were some things, syndication is its own kind of subworld or subculture, if you will, because I was speaking to a very, very successful single family investor here in Memphis, and they own 800, 1,000 homes. And he goes, man, I still don't understand syndication. I have no idea how that works. I mean, so there's a lot of nuance to it, but I guess, were there some things that you thought that certain things had to be in place or worked in a certain way that aren't actually how they work, that once you figured it out, you're like, oh wait, this is very different than I thought?
Yeah. So I assumed, of course, that I had to be the one to sign my name on the loan and on the debt. And that is not the case. And it's called leverage. And that's why I'm able to scale so fast, as I mentioned earlier, through apartment syndication. And just, as a general partner on a deal, we are active in the deal, whereas a limited partner is passive in the deal. Right. So a limited partner invests their capital and the general partner is active. And so I have invested both as a limited partner and an active partner as a general partner. And so I'm getting the best of both worlds at this point.
Right. Yeah. You mentioned something about signing on debt. I mean, as a general partner, generally you are signing on the debt in some capacity, whether or not it's recourse or non-recourse is, I guess it's something else to talk about. So is that one of the things when you say leverage via syndications for the debt side of things, is that what you mean by that, where you're able to bring in other partners that can help you take it down and sign on the debt together?
Correct. So we have key principals and sponsors that bring the net worth to the deal.
Right.
And so that's what I meant by not myself, me personally, I do not have to sign on the debt just yet. I'm still building my net worth and eventually I will, but I'm so blessed to partner up with people that are willing to sponsor and be a general partner and a key principal in the deal.
Right. Yeah, that's necessary. Absolutely necessary. Bringing on either a balance sheet partner or KPs that have the net worth to make the deal go around. That's really cool. How did you get involved in your first deal? Tell me about that experience, that process, why you decided that was the deal for you, deals you passed on. Tell us about the first deal first, then we'll talk about deals maybe you've passed on.
Yeah, absolutely. So I'll tell you about my first limited partner deal that I invested in on, and then I can also tell you about the first co-GP deal that I invested in on. So the first limited partner deal was located in Richmond, Virginia. I am from that area. And so that was the first deal I invested in a year ago, back in May of last year. And so I was still new to the commercial space. However, I had to educate myself and understand the terms because it's just like speaking a second language. And so I already knew the market. I knew where it was going. I just had to understand how the numbers, work in the commercial space. And so I consider it a home run because you invest your capital in the deal. After 2 years, there was a cash out refi. So I was getting 100% of my invested capital back.
Right.
And then I was still remaining in the deal until it sells, between year 5 and 7. And then there was an exit strat. One of the exit strategies is to sell each unit as a condo. And so this was a no-brainer. I already had the capital just sitting in my account, and I wanted to make my money work for me and test out how it, the perspective of being a limited partner, since eventually I wanted to become a general partner.
Right.
And so I was really excited about the deal. I'm from the area, and I knew that I would, get my money back in 2 years. So that was a no-brainer. And I consider that a home run for my first limited partner investment.
Has that deal gone as you expected?
Yes. It has. And that has also allowed me to invest in other deals. So the first deal I invested in was 27 units in Richmond, Virginia, the one that I just spoken about. So after my first deal in Richmond, Virginia, the home run deal that I just mentioned, the second deal I invested in was in Florence, Kentucky, that same month in May of last year, 81 units, followed by 2 more deals, which was student housing in July. So 19 units in Scranton, Pennsylvania, and then 24 units in Columbia, South Carolina. And those 4 deals I invested passively as a limited partner. And then fast forward to October, I had my first opportunity as a co-GP on 56 units in Waco, Texas. So this time I was more active in the deal. So I helped raise capital, and then I also helped asset manage. So that was my first co-GP opportunity. Alongside, I also invested as an LP. And a month ago, we closed on 120 units in Des Moines, Iowa. And I invested both as a GP and as a LP. And currently we are working on 174 units in Tulsa, Oklahoma. So I'm really excited about that, followed by a couple of other deals that we have in the pipeline. So a lot has transpired within the last year. And again, I am investing from Kuwait, outside of the country. So I hope this inspires you along your journey, whether you're on a journey or you're thinking about investing in real estate. And just remember me that I am investing outside of the US. And if I can do it and make it happen, so can you.
Right. Yeah, absolutely. I love the starting as a passive investor first. I feel like that's where a lot of people should start, because they ask me all the time, hey, what's the, if I want to kind of grow bigger or get, do some bigger assets, I always say start as a passive investor. Like, start there. I mean, assuming you have the capital to do so, it's a great way to learn early on and get a front row seat to how deals are packaged up, the things that people are doing, the investor communication styles. Like, you get to learn so much. It's a pay-to-play program, yeah, but it's also a get paid to play program. So it's not a bad way to do it, especially if you're halfway around the world.
Yes, I love how you put that. And I also highly recommend it as well. A lot of people want to be so eager to jump into the general partner role. Right. And I advise, the same thing. go ahead and learn from an LP perspective. So that way, when you are a GP, you can speak about your experience, and that also builds credibility.
Yeah. Oh, for sure. For sure. And you get to see, what other sponsors are seeing, what they're thinking. Why have they chosen to invest in this particular market or this particular asset? And I think all of those are just little, and again, none of it's going to be the thing that's like, oh, this is the pivotal moment, but it's going to be all the little building blocks that help you along the way. How did you select for general partners to be a limited partner with? Out of the gate, I mean, that's 5 different, student housing in Scranton, Pennsylvania is not the same as an 81 unit in Florence, Kentucky. Those are very different asset classes, I'm imagining, with different operators.
Yes, absolutely. So out of the first 4 deals that I invested in as a limited partner, 3 of them are under the same operator, and 2 of the student housing is with the first operator that I invested in from Richmond, Virginia. So my thing is about relationships. Whether I'm a limited partner or general partner, I want to make sure that I like, know, and trust the operator. And I felt comfortable after the first deal. So I was even more comfortable investing in the 2 student housing deals as well.
Got it. So they were the same operator. That's really interesting. How did you have confidence in this operator for student housing and multifamily apartments? I mean, because again, the student housing especially seems like a much more nuanced asset class.
Yeah. So both of the operators actually have experience on the residential side and in smaller multifamily units as well. One of them in particular came from the hotel industry. So I was able to leverage his experience and believe in him. It's all about trust, like, and knowing who you are investing with prior to investing in the deal, right? And so I was comfortable in deploying capital in the deal. The deal made sense. I did my due diligence. The numbers worked. And so I executed. And I'm so proud that I did because, man, the returns on that is because, you get to charge per bed versus, 3-bedroom, 2-bedroom. And so I'm really excited when both of those deals exit.
Yeah, no, that's really, really cool. I love that. And now let's talk about the general partnership side of things. I mean, being a general partner while living in Kuwait, working as, you're a veteran, working as a military contractor. I mean, at what hour of the day are you doing this? And then how are you making sure, that what you're packaging up and bringing to your investor group is the right asset?
Yeah. So I am 7 hours. Currently, I'm 7 hours ahead of Eastern Standard Time. So right now, as we record this podcast, it is 7:19 p.m. here. Right. So the time difference is crazy. I'll be honest. There are some nights where I'm up late, up early in the morning, and even up in the middle of the night. But it's how bad do you want it? Massive action equals massive results. And because I'm putting in the work, that's how I'm seeing the results all the way from another country again. So I have to balance and manage my time. I do a lot of time blocking. I do time auditing as well. I'm a big believer in also working out. I'm a bodybuilder. So I find discipline in that, and it helps me to, as far as like my mental health and relieve stress and things like that. So if I can beat myself mentally in the gym, then I can, face anything when it comes to adversity and challenges in life. And so the military has also taught me to be disciplined and, go after what I want. So I believe in educating all of my investors first and foremost prior to them investing in apartment syndication, because this is a foreign investment for most. And a lot of people have never heard of it. I didn't even hear about it until last year, to be honest. So I educated myself. And so I want to educate my investors first and foremost. And so I ensure that the deal makes sense and it's something that I personally want to invest in. And once the deal does make sense, and I built that relationship to work with other general partners in the deal, because I built those relationships prior to investing with them, because it's just like a marriage. If you're investing in a deal, you're with them for X amount of years. Right. And so as long as the deal makes sense, as long as the numbers pencil, as long as I have that relationship built over and I really look through the deal, then I will go ahead and share that deal with my investors and ensure that they understand prior to investing in the deal. And again, this is happening all the way from Kuwait, outside of the US, but I'm investing in the US.
How has that worked for you? Because I know this is a lot of questions, or, especially people as they're scaling, the question of how am I going to raise capital? How am I going to build an investor base? How have you gone about building an investor base?
Yeah. So I started with 0 emails. Again, I started last year, and I have an email list of over 600 people. And it took some time. It did take some time. It took a lot of work. I post every day on social media. So I use that platform to educate, inspire, and motivate as many people as possible. And so because I am speaking about my real estate journey, I am attracting investors on a daily basis. I am also using a lead magnet. And then I also mentioned previously that I educate. So every month I have an educational webinar. I started this back in January. And so I have guest speakers that come and, educate my investors on different topics. Like this month, tomorrow, actually, we're speaking about infinite banking. Back in January, we spoke about leveraging your self-directed IRA and being able to invest in apartments. The next month, we had spoke about investing in apartment syndication and just walking through investors on how they can invest passively in a syndication through a sample deal. So again, I started with 0 investors a year ago. I am constantly being requested to come speak on podcasts because people are blown away by how am I investing from Kuwait in the US. And it's all about credibility, building your brand, and then basically just using social media as a platform to, as I mentioned earlier, to educate, inspire, and motivate, and just speak about my personal journey in real estate.
Love it. That is awesome. Yeah. And I love the idea of time blocking, time auditing, and then just saying, hey, how, what was your question you said earlier? How bad do you want it? I think that's the question that many need to answer when they're not seeing results as well. How bad do you want it? And then taking the steps necessary. So, getting in the middle of the night and doing a webinar, I'm sure is not priority, because I guess that'd be, if you have people in the, if you're doing a 7 o'clock or 6 p.m. webinar here in Central Standard Time, that means you're up at 1 a.m, or no, it'll be 2 a.m. for you.
Exactly. But it goes back to, Sam, it goes back to your why. Why am I doing this? I'm doing this to not only help myself, but to help others build financial freedom, generational wealth, educating fellow veterans. And, my target investors are fellow veterans because I'm a veteran. My father was a veteran, my grandfather, my great uncles, and then also minorities. There aren't many minorities in this space, especially women. And so I am being the voice to help others, to acknowledge and let them know that, hey, I started from nothing and you can as well. And so just helping bridging that wealth gap and continue to inspire, educate, and motivate others is my why.
I love it. Yeah, that's absolutely awesome. That the idea that anybody can do this is just something that people certainly need to hear. I had an interview with somebody else earlier this morning, and it was 9 years ago they moved to the U.S. with $180 in his pocket, and now he owns like $40 million in real estate. It's like, okay. Wow. He goes, hey man, you know what? 9 years ago I had nothing. I was broke. But if I can do it, so can you. So that's really, really cool. Keisha, thank you for taking the time to come on today and tell us really the secrets to your success. And it sounds like a lot of it is just the get it done. Get it done, put your nose to the grindstone, figure out your plan and go implement it. And you've given us a lot of things here really to think about. So certainly appreciate that. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
So I have a free guide. It's the beginner's guide to investing as a limited partner in apartment syndication. So if this message earlier resonated with you, feel free to get it from my website at www, of course, Kennedy, like the president, Kennedy, Remedy, Remedy, investments with an S. So Kennedy, Remedy, investments.com/guide. We are the remedy to your investment. So that's the first thing. And then the second thing is to reach out to me on LinkedIn. I love getting on phone calls and getting to know my future and fellow investors. And you can find me on LinkedIn, Keisha, Keishia, Kennedy. I am also on Instagram. So Kennedy Remedy. And then, of course, on Facebook, we have Kennedy Remedy Investments. So feel free to reach out, and I would love to connect with each and every one of you.
It's a lot of great ways to connect with you, and we'll make sure that we also put those in the show notes. Kennedy, golly, you got me saying Kennedy, the last thing you said, Keisha. Kennedy, thank you for coming on the show today. I certainly appreciate it.
Yes. And thank you for having me. It was a blast.